How you doing? My name is Steve Drobny. I run a firm here in LA called Drobny Capital and have been in LA for 15 years starting various businesses, so I'm pretty excited to do this panel. Huge fan of Los Angeles. And we've got a great set of panelists here that are entrepreneurs and running businesses here in LA. And can I just take a quick show of hands in the room? Who is from Los Angeles? So let's go the other way. Who's not from Los Angeles? Few. So we have a few sales pitches to do. But I was sitting having breakfast this morning thinking about LA, and the negative words that come to LA are like plastic, left coast, Hollywood kisses, Flake Central, traffic pollution, taxes, natural disasters, and now no water. And according to my LA friends, LA sucks. But the positives are quality of life, the range of activities. You can be at the beach and the mountains same day. World-class attractions, museums, theaters, sports, global connectivity. On LAX, you can be on the long haul and anywhere in the world with a long night's sleep. And commerce, all the universities and the real small business culture here that's pretty unique. The title is Why is LA Working? And a lot of the headlines are Silicon Beach, Google and Facebook in Venice and Santa Monica, and the Milken Conference. The Milken Conference has exploded and brought people to LA, and I think a lot of people will stick around after this. Julie, you started 4 companies in LA after, and been here for 20 years, after spending your college and business school years in Boston. Thankfully, you weren't in Boston this last winter. Why LA, and talk about some of the disruptions you're seeing.
So when I was in Boston, I was running an international sales force for a company, and I kept noticing that the LA sales team routinely underperformed every other sales team, and I was trying to figure out what is going on out in LA that's causing the sales teams to underperform. And if you go and you sell in New York, you can do like 4 or 5 face-to-face sales calls in a day. This is back 25 years ago, before sales went online. So I came out to LA and I realized if you're lucky, you could do 2 in a day because of the traffic. And it was just sort of the geographical spread out of things. But then I also realized now, having lived here for 20 years, that as you're driving to your next appointment, the beach has got a very strong pull. So it's the quality of life is just so fantastic here. So I moved out here for quality of life reasons. I love it here. I think that starting businesses is really hard. I think it's the hardest thing to do. And so if you're going to do it, you might as well do it in a place you like to be when you have those few precious moments of free time.
Cool. And what are the negatives of, well, you give some of the negatives. What do you see, besides the quality of life, the positives of starting businesses here in LA?
Positives or negatives?
Positives.
So
we covered the negatives.
So
traffic.
The positives, so I'm maybe unique on the panel in that I live in Pasadena. I think that LA is a series of microcultures, and so Pasadena is very much influenced by Caltech, Jet Propulsion Labs, and the Art Center College of Design. So these 3 institutions give you great design, great technology, and potentially an intro to a market that maybe Elon Musk discovered with SpaceX. So, unlike your list of things, plastic and so forth, it's the opposite of what anyone would expect. And it's really just a suburb of Silicon Beach. So I enjoy the intellectual stimulation. I enjoy the kind of people that are coming out of those institutions. And I find that compared to Silicon Valley, there's less competition when you're trying to hire and recruit great employees.
Cool. Kara, you run or are a partner at the largest venture firm in Los Angeles. Can you talk about your experience of investing in and identifying and building LA businesses?
Yeah, absolutely. So I'm a partner at Upfront Ventures. We just closed our 5th fund, which is close to $300 million fund, the largest in Los Angeles and the oldest in Los Angeles. Just for quick context, I started in VC in '99 in Boston, and I think that actually the differences between what was going on in VC in the late '90s and what's going on today are sort of indicative of why LA is emerging, which is back then it was all infrastructure. The firm I was at is one of the largest firms around, and we invested exclusively in communications infrastructure and services and software. Consumer and applications investing didn't really exist, and so. I think it's what we've seen, and Upfront's been around for 25 plus years, but we've seen increasingly kind of the amount of dollars coming in, the number of companies started, just booming in the last 5 years as we move from sort of that infrastructure era to that application era. And there's a great book that sort of looks at this same thing happening across historical industries like railroad and steel and oil and gas I'm blanking on the woman's name, Carlota Perez, I think is her name. And I think we're just at a similar moment in time here. And so as a result, we've seen, I think, the amount of capital coming into startups in LA has gone from $500 million 5 years ago to $2.5 billion last year. A few other numbers for you guys. We have now the third largest tech ecosystem by number of startups listed on AngelList. So 12% of startups on AngelList are based in Los Angeles. Still a distant third to Silicon Valley at 24%, but catching up pretty quickly to New York at 14%. And we're seeing the largest growth rate of startup companies being started. And I think that's attributable to a number of factors, which I'd be happy to go into. But one of the big ones is moving from pure infrastructure and the routers and the switches and the load balancers into a world where user experience and design and import export and all of these other things where LA has this broad, diverse pool of capital makes a very large impact in the ability to not just start a company but really scale a company.
Cool. Walter, you have a unique LA startup / growth business story.
Yeah.
Can you explain a little bit about what you do?
Yeah, so my history is working and building startup companies, and about January of last year, the Boston Consulting Group, a large, well-regarded management consulting firm, realized that there was a lot of value to be unlocked in the balance sheets of all the corporations in the world to help them create agile, smaller companies that it's very hard for them to incubate within their own infrastructure. So what was created was a group called Digital Ventures, which is now over 240 people strong. About half of those employees are located, just like some of these people are saying, in the Silicon Beach area. And what we do is we unlock the value in the balance sheet. If you look at just a handful of the companies, Western Digital, Tesla, Live Nation, and a few others, you're looking at $20 billion worth of cash on the balance sheets for those companies. That's the same amount of money that was deployed in the entire Series A last year. So we think that by deploying some of that capital in a very efficient way, which is small management teams that can work outside of the infrastructure of these larger companies, you can build meaningful companies that have enterprise value and are reaching consumers in a way that have not been done before. So we're super excited about it. We think that the entrepreneurs that have been coming out of the design center, which have that really consumer-first perspective, is one of the hallmarks of Los Angeles. Obviously, the creative industry and the fact that things have moved beyond kind of the architecture and the pure back end, but moving to more of that consumer value perspective is one of the value props for LA. And you see that our clients are coming through. They want a piece of that. They want to understand how they can play a role in a way that is really going to be compelling for them. And with the very rich relationship that Boston Consulting has had with these players, we've been able to really scale and grow pretty quickly. So it's been exciting, and it's just the beginning stages. It's a little bit strange calling a startup out of Boston Consulting Group a startup, but that's very much what it is because we're focused on product development, engineering, et cetera.
And you're based in Manhattan Beach and hiring pretty aggressively right now.
Yeah, we are. We have the best minds from the strategy perspective, but at the end of the day, what we're really focused is on the consumer experience and focusing on what's called an MVP, or minimum viable product. And that requires smaller teams, agile teams, and teams that have a different skill set. And we've been hiring aggressively, and I think it's a very interesting value proposition. We don't compete from a venture perspective with an upfront. Like my last company was funded by upfront. Rather, we work together, and we have the ability to incubate ideas, partners. We've acquired 3 companies since forming last year, where we not only acquire the teams, but we acquire the IP that can be deployed to retail companies, to travel companies, to pharma companies. And so that's kind of our mandate, and we're really excited for where we think the business can go in the future.
Cool. Scott, another serial entrepreneur. I think I read you started 37 businesses.
Yeah.
That's incredible.
Yeah.
All in LA?
Not all in LA, but many of them in LA. It's sort of amazing to even be talking about the emergence of LA. I was definitely here before it was cool. You know,
In the 50s?
no, but you know, it's. I remember driving north on the 5, and there's this billboard that used to say, you know, food grows where water flows, and I think that's true of young companies. I think that in Los Angeles, the real struggle has been one for the right kind of capital. I think upfront is a really important, you know, part of the ecosystem here, but somewhat unique. I mean, upfront, you know, in its former sort of version, GRP was one of the only real venture funds in Southern California. And, you know, we're here, I'm here in part because Los Angeles and Southern California is the automotive capital of the world. And if you look at the companies that have been driving the online automotive transformation, they all are here in Southern California, and most of the car companies have design studios here. And this is where automotive passion and sort of the love of the car, the love affair for the car comes from with Americans. And so it makes sense that we are here, but it's been fascinating to watch the transformation in terms of capital and the ecosystem. And I really do believe it's about liquidity and young entrepreneurs who get that liquidity, then reinvesting back in the community. And so a lot of these companies that are very exciting and interesting now are being funded by not just great venture funds, but also by great entrepreneurs who are really sort of seeding the ecosystem. And it's very much like Silicon Valley used to be 20 years ago. And you've got, I think, an enthusiasm. And what's different here than was ever the case in Silicon Valley is we're now more than ever focused on the value of an experience. And the value of an experience is really translatable into what LA would really sort of, I think, sort of count as its core competency, which is entertainment and the ability to create very pleasing graphical user interfaces and experiences at retail, I think is what LA sort of brings to the table institutionally. Our institutions are not nearly as academic as they are entertainment in nature. And so, you know, when you look at where do we sort of draw our talent from, it's really from the studios in large part, and it's, you know, the entertainment industry. And so you get a much different sort of bias towards you know, a focus on the experience economy and how you know, we're going to transform all sorts of retail environments. And so that tends to work very well for what we're doing. I think that if you look at most of the LA-based companies, that's really where their strength is, not so much as you know, in hardcore tech.
But it's interesting, I saw a presentation from Upfront that LA graduates the most engineers of any city in the country. Do you hire locally?
I talked about this with Mayor Garcetti. By sheer numbers, we've got more engineers in Silicon Valley. I mean, so the idea that we would somehow not boast that, you know, we win because of sheer size. And the trick is having great companies for those engineers that are really talented to go work at so that they don't leave LA. You know, I think that companies like TrueCar and a number of others are starting to attract that kind of talent. We recruit specifically out of Google and Apple and Twitter and Facebook and all of these great tech companies, and we bring people to Southern California because of the climate, because of the lifestyle, and we tend to pay like a tech company too. So, you know, we're now able to sort of keep up on that regard. The one thing that I think has always been interesting about LA businesses is that you do have to generate real revenue. We don't get nearly the hall pass that Silicon Valley companies do on sort of waiting until you know, till you get adoption to then figure out how you're going to make money. You know, we from a very, very young age had to generate revenue and had to really earn our keep, and I think that's a good discipline for LA that differentiates us.
Cool. Steve, clean up. Everyone's here talking about liquidity. You run one of the larger banks in Southern California. Can you tell us what you're seeing in LA over the last 5 years? I mean, it's from Phoenix rising from the ashes, effectively, right?
Yeah, it's been incredible growth. But to echo some of Scott's points around capital, one of the things that really differentiates Los Angeles is the diversity of capital and capital sources, and I think that acts as a magnet for a lot of new business creation. In a lot of different sectors. I mean, it's not just media and digital, it's also defense, biotech, some retail, computer sciences. As you go down the coast, you have real diversity of businesses as well. But when you think about capital, Los Angeles is really blessed with a lot of diverse capital players in different parts of the capital structure for different businesses. You not only have institutional funds and venture capital funds that can do the traditional, A round, B round financing, but you have a whole collection of family offices. The family offices tend to drive a lot of the entrepreneurial activity with investments and partnerships to create businesses that maybe don't fit into the institutional box for a venture capital fund. You also have about 150 banks that are headquartered in Southern California, all of which have different perspectives and views, and oftentimes can't directly invest in startup businesses, but tend to serve as the engine behind a lot of the private source of the capital, whether it's family offices and providing the financing to the family offices, or whether it's funds or entrepreneurs directly. And then you look and you have great sponsor community with large private equity funds, but also smaller private equity funds that can really target the smaller check size and really strong strategics. You get the clusters and the micro enterprises in the area that tend to cluster around some of the strategic activity, the entertainment business, the defense down in El Segundo. So the capital sources here bring together a very diverse set of capital channels, set of exit strategies, and set of partnerships that it's really unique as you go around other major cities in the U.S.
And what do you see as your fastest growing client as part of Bank of California?
Well, for us, it's a lot of the entrepreneurial activity, but it oftentimes is more of the private business. A lot of entrepreneurial businesses get set up to go through the venture capital system where an exit and a strategic exit's the goal. For us, it tends to be partnering with private business owners who are looking to just grow a nice business and not tap into that institutional venture capital channel. That are looking for duration, cash flow, tend to partner with other local investors and family offices, and tend to need a bank that can kind of serve the diversity of their business, where when we think about the entrepreneur, there's a life cycle that a bank can play in. You start kind of early in it where it tends to be asset-based or equipment finance or factoring or accounts payable. As the business matures, you move into a small business loan, a small ticket C&I loan, where the business becomes bankable. And then as the business succeeds, you moved into a more traditional business loan, term debt. And for the banks out here, the real challenge is to have the diversity of services to be full service across the entrepreneur's life cycle.
Cool.
And I just add that since most entrepreneurs have most of their wealth tied up in real estate, you also need to serve their real estate needs, because that's where a lot of the seed capital comes from, whether it's their house or income properties. Real estate is the core source of most of the entrepreneur's wealth.
Cool. Julie, you've started 4 companies. Where do you source your investors?
So the first company I started last was at the beginning of the first bubble in 1998. And my investors were Sand Hill Road investors, and they were fantastic for a new CEO trying to figure out how this all works. Every board meeting, I was pressured to move the company to Sand Hill Road, to Silicon Valley. If my company hadn't been acquired in 18 months, I don't know if I could have withstood the pressure. So I started out getting...
Was it acquired by a Silicon Valley company?
It was acquired by a Silicon Valley company, which at the time was called Ask Jeeves, now called IAC. Carrie's worked there. And I will say that thanks to my Johnny-on-the-spot investors Greylock, they understood the market forces that were going on in Silicon Valley, and they knew that this was a company and a style of company that Ask wanted. So they helped put together this partnership, which turned out great for all investors and for me personally. So I appreciated the gravitational pull of the investors and the venture community in Silicon Valley. Then I started a second company using really high technology out of Caltech and Jet Propulsion Labs during a time where there was an optical boom going on for optical technology. That market crashed as I was fundraising, so then I learned how to raise capital from the Department of Defense. And it turned out that there's a number of funding vehicles that actually have better risk profile in some ways than venture capital, where it was 1 in 4 proposals were being funded. So if anybody knows about raising money, it's like 1 in 100 get venture capital, 1 in 4, so I wound up raising a ton of money that way. But the problem is it takes you off your game. You wind up building solutions for the government instead of building solutions for the market. So I've gone back to venture capital. My last company was a spin out with Idea Lab, and I had a combination of Trinity Ventures in Northern California and Rustic Canyon locally, Idea Lab locally, and then some great investors turned out to be NBC Comcast, who big strategics are, I think, increasingly critical for startups, especially when you're looking to find large, important customers.
And when we were talking the other day, you said you think there's a disruption coming in terms of the Silicon Valley, Sand Hill Road, VC, gauntlet.
So the Silicon Valley team, so I think that, as I said, for my first startup that I did back in the bubble, it was really critical to have Sand Hill Road investors. The reason is you couldn't hire employees if you didn't have a great investor. You couldn't get a good lawyer back then because so many companies were being formed, and you just weren't in the flow of information. I think that that's changed. I think that we've seen really big companies emerge in other parts of the world who have been able to do it just on sheer momentum of the internet. And I think that the model is shifting a bit. Back in the first bubble, it would take, the wisdom would be $30 million to get a software company off the ground. 5 million would be your Series A. And now they say 500,000 is the new 5 million. So there's so many more companies at that seed level, and everybody's just standing by to see which signal pops. By that I mean which company's getting traction. So you're reducing a lot of risk with a lot less money nowadays. And so who can get to those entrepreneurs with the right kind of money? And I think that it's less about Silicon Valley and more about star makers. I still think that Andreessen Horowitz has an unbeatable operation there. But in LA, I think upfront is the place to go. And I also think that we need more investors. Scott mentioned we are way bigger. I looked up the population of Southern California compared to Silicon Valley. 10 million people in LA County, 3 million people in Orange County, and in Silicon Valley, 3 to 4 million people total. So again, we've got all this resource, we've got all these people, and yet we have just a fraction of the amount of venture capital. And so I think in a very competitive market, more money should find its way here because there's a dislocation.
Kara, do you feel handicapped in not being on Sand Hill Road?
The honest answer is yes and no. I think there's
Sound like an economist.
Well, I watched a bunch of them yesterday, but I think there are real advantages to being in LA. I was up in Silicon Valley last week. We invest really heavily in Silicon Valley. I lived up there. I worked for Battery Ventures in Silicon Valley. And it's a special place. I mean, it's just a unique, special place where you have, we have, like 10 or 20 Scotts and Julies, which is wonderful. And I think that's a big part of why you're seeing great companies. The next generation of great companies are being built because we now have things like a TrueCar IPO. It's one of the most important things that can happen to Los Angeles because many of our successes, MySpace and iMail, two of Richard Rosenblatt's companies, which were sold for quite large sums, they're gone, right? They didn't, they did generate some next generation companies like Gravity and others, but they didn't build sort of the Google or Facebook kind of, cultures where people walk around with the t-shirt on and learn from each other and start their next generation and get funding and advice from Scott and his senior team. So we're at the early phases of having it. And so when you see a TrueCar IPO, a Cornerstone on Demand, a Rubicon, even a Maker acquisition going into Disney and really anchoring, one of our biggest acquisitions of all time that's in LA and staying in LA. Unlike, an Oculus and a Beats, which are both great acquisitions for us as well, but a lot of those teams actually have moved north. That kind of, those companies, the permanent ones that have the brand and continue to evolve and iterate, are what really will fundamentally change the landscape. So yes, because Silicon Valley has had Apple and Google and Facebook, and before that Oracle and Siebel and all of these companies for years and years and years, generating new entrepreneurs. But in life, I'm attracted to growth, whether it's where I send my kids to school, the nonprofits I get involved with, or the cities I guess I now call home. And I think there's no more exciting place to be than Los Angeles right now, because we're fighting to be a leader, and everyone here is fighting together, and we have a real sense of community around doing it. And I think we have really unique things to bring to the table. I'll give you one more example. I think Scott talked a lot about the automobile, which is an industry where we've always excelled, and it's interesting because TrueCar is this wonderful company. Before that, we had Edmunds, right? And Edmunds is theoretically.
I love it's before that we had Edmunds. As if they died and went away.
Well, and we
still have Edmunds.
And we still have Edmunds, right? And
Yeah.
Edmunds and TrueCar compete, and that's what will ultimately probably make both companies better and better over time. And we have other industries where we do incredibly well, gaming and entertainment and content. But if you look at the two things that I think LA has really historically excelled at, it is storytelling and brand building and content, and then it's monetization, right? The monetization of the internet began here with AdSense and Gil Elbaz, who's now started Factual, and a seed fund, as well as Overture, which was the first monetization engine, and was a multi-billion-dollar acquisition that went into Yahoo. And you still have guys like Ted Mizell, who's out there doing his next generation of stuff coming out of Overture and healthcare in other industries. And then we had Lower My Bills and all of the, Shopzilla and all of sort of the monetization, Commission Junction, all of those companies. And then you have this content piece and the storytelling piece. Those used to be businesses unto themselves. And increasingly, I think people are realizing that every brand in the universe, every company in the universe needs to tell a story. It needs to tell a story through mass media platforms as much as they need to through hacker kind of acquisition. And so as a VC, what's interesting is I'm seeing companies as kind of non-LA as possible, manufacturing, kind of CNC machine companies, education companies, enterprise software companies who are finding YouTubers as their highest performing acquisition channels. So you see more and more companies recognizing this broad value LA brings. So long story short, Silicon Valley is special. The quality of entrepreneur and the number of entrepreneurs of that quality, I don't think we have yet in LA, but we're kind of a rising star, and I think we have a lot of unique things that we bring to the table. And as a VC, it's nice to be one of the few VCs that have access to it. That said, we want as much capital down here as possible.
Mm-hmm. And Scott, did you raise your money from Stone Hill Road or down here? And did you always feel like a second-class citizen doing a startup in LA versus Silicon Valley?
Well, you definitely don't have genuine tech cred as a LA-based startup. You have to fight for that. I think that one of the things that we have really worked hard at is making sure that we have, genuine engineering competency in the business, and I do think that makes us somewhat unique for an LA company. A lot of the things that go into the fundamentals of why investors invest in tech companies sort of start with the argument that you've got to have really good, talented engineers. And because of that lack of street cred, I do think that LA struggled for a while. And I do think the quality of capital, I mean, the comment about you've got such a different and diverse capital base here, and the terms and conditions that come with that capital have traditionally been pretty creepy. And so as somebody who's raised a lot of money from a lot of people, I've pitched just about everybody in Los Angeles. And there's just a fundamental different perspective about investing in tech companies and sort of what makes that magic happen. And there's, at the core, there's a fundamental belief that management and founders should own a big enough chunk of the company to be properly incentivized. And you can argue whether, X percent is the right amount or Y percent is the right amount, but clearly something happened in Silicon Valley where you've got just outsized founder compensation, and that incentive has driven just extraordinary and magical returns. And I do believe that that's part of sort of what makes companies work, and sort of, what's happened over the last 20 years in Los Angeles is the nature of the term sheet has definitely shifted much more in favor of what is more traditional Silicon Valley tech investing. And I think that as demand is created here and you get more interesting companies that have genuine tech cred, and you have more Silicon Valley investors making the trip to LA, you get an overheated market and everybody starts to normalize and the conditions begin to sort of find a market clearing level, and you don't have creepy liquidation preference and overhang and preferred returns and all sorts of things that I think sort of came with taking money from LA. And as that shifts, and I think Upfront is a great example of a very tech-oriented investment thesis, and that is going to drive a whole community of results over time. And I'm a big believer in the ecosystem, and I do think it takes time. And I do think that LA is probably the most interesting market, bar none, in the world right now in terms of what's going on. And it is working. I mean, it's fun to see. It is definitely fun to be here in LA and to actually now see genuine engineering talent at sort of the recruiting level that just wasn't here 5 years ago. When Yahoo started to sort of have a campus here in LA, there was a lot of engineers making the trip, but they weren't moving. They were still living in Silicon Valley, but making the day trips or during the week trips down here. They're now moving here, and there is, I think, just a hardcore engineering base that's also emerging around the aerospace. The dynamic things that are happening at SpaceX and sort of around SpaceX are just fascinating. And so I think that you're starting to see real tech cred that's going to draw real money, that has sort of that genuine magic formula for creating real value.
Cool. Are you doing angel investing in LA right now?
It's interesting. I'm sort of like an entrepreneurial salt lick. I wish I was a fund, because I meet everybody who wants to raise money. I've raised so much money that everybody assumes if they come talk to me that I'll invest, or that I know who they can go talk to. There is still a lot of education that needs to occur with LA entrepreneurs. There is something also to be said for being in the ecosystem in Silicon Valley, where you're actually oriented properly to sort of the right set of expectations, how much of the company you're going to have to sell, that kind of thing, understanding how to read a balance sheet, a statement of cash flow, understanding the terms of a financing and how to sort of speak the lexicon of closing a financing and IRR and understanding how to talk investor. All of that, I think, is still sort of coming. I tend to be very long on my own company. One of the things that I know about TrueCar is that the potential of the business is just remarkable. We happen to be in one of the biggest categories, and it's one of the least interesting to venture capital investors. I've been raising money in auto for 25 years, and I've been out saying how screwed up it is. And now all of a sudden everybody, because of TrueCar going public, is saying, well, we'll start flooding the money into the space. When you add the car, the financing, the leasing, the insurance, the maintenance, repair, refueling, accessories, peace of mind through extended service agreements, warranties, roadside assistance, you get almost 20% of GDP in this country, almost a $4.2 or $3 trillion ecosystem, and it revolves on a 6-year turn, meaning we only buy cars once every 6 years. I think we only buy cars once every 6 years because it's gnarly and because auto finance is traditionally very rigid and hard to break. And so those two things, I think, can be addressed by TrueCar. I think we can solve more of the problem today in a lot of respects, believe it or not. We're just a really elegant couponing business. We're a post-apocalyptic company. It's very rugged. We get paid. But we've solved a really difficult part of the buying problem, which is price confidence and price discovery, which is where a lot of anxiety comes from. But it doesn't really solve the problem. The future of car buying is you're going to buy your car on your phone. And to do that, we've got to solve a lot more than what we do today. It's not just about getting you information about a car and being able to track that and get paid well for it, which is what we do. We're going to actually have to map to the entire transaction. We're going to have to solve the problem. We're going to have to help you pay for the car. We're going to have to manage your trade-in. We're going to have to give you a liquid value on that car and become much more of a marketplace. Doing that means that our trajectory, the physics of our problem require that we think about how are we going to generate $1 billion in revenue in 2018 or 19. Last year we did 200 million. So to scale from 200 million to $1 billion, that is a fundamentally different company. And so the things that I'm thinking about with my senior team have almost nothing to do with how to operate the business. That has to happen sort of behind the scenes, and we have to be a great grower and performer, but it's such an efficient market. And so the long-winded answer to your question is I'm buying my own stock in the open market, and I continue to do that. To me, it's sort of a way to lever up and take a fairly medium-priced option.
Cool. Better than the Salt Lake.
Better than the Salt Lake, yeah. And I've found that I'm the worst investor in the world. I'm the easiest person to sell. If you tell me your idea, I will think in my mind exactly how well it can work, and then say yes. And then if I'm not a controlling shareholder or running the business, it doesn't end up working out that way. So it becomes very frustrating.
You and I talked about the difficulties of office space. You're in Santa Monica, and you have 500 employees in multiple offices.
Yeah.
That's a constraint with Venice Beach. You're seeing with Facebook and Google. Walter, you strangely chose one of the most high-priced real estate in the country, Manhattan Beach, to start hiring people. How do you deal with the? I mean, when you fly into LAX, it's just a crazy grid of just people. So how do you deal with that?
We got a great deal. I mean, the building was empty, so we got really low square footage. But the point for us was that, like Kara and Scott have been mentioning, being in a position to take advantage of that external money coming in, external resources, and LAX is the window to Asia and a huge hub. So we wanted to be actually near the airport. We thought that for our business, core to what we do is basically creating labs for huge companies. So we want to encourage not only more resources with Silicon money coming down here, or resources like the entrepreneurs who are coming from Silicon Valley, but also corporations that want to know what's going on, who want to have a foothold here. And we thought that being near this transportation network would be really advantageous, so we can avoid the traffic issues and whatnot, while still being very beneficial to kind of the positives of Los Angeles near the beach and whatnot.
Mm-hmm. Yeah, I'll add a thought. Our business, we are a 95% gross operating margin business. So our biggest expense outside of customer acquisition costs is people. The idea that we would put people in a 30% less attractive space is just sort of not a very good math equation. The idea that engineers want cold, dark, quiet spaces somewhere in the Inland Empire is not true. They like oceanfront views, and they like the promenade, and they will actually move for that.
Does that make them less efficient?
No, I don't think so. I think people who are happy work smarter and work better. And I think our belief is that an A+ engineer is 10 times more valuable than a B+ engineer. Mm-hmm. And so if you're going to overpay and reach for somebody like that and pay them, our sort of median pay at TrueCar is one of the highest in the nation. I think we just got rated as like the top 15 highest paying employer, right up there with Google. We value the team, and we're constantly grading on a curve. And so if you're going to make that kind of a stretch and pay people that kind of money, you might as well also make them really happy. And it totally all of a sudden addresses should you have a kitchen? Should you have caffeine, sugar, coffee? Should you keep people at their desks and give them sort of the opportunity to really enjoy their environment? And the answer is absolutely, if those are the people that you're expecting to really drive your growth.
But isn't that the stage of the company? Because I found when it's a really early stage company and you're giving them, free food at lunch and so forth, people forget that this is survival. And so I've seen in the and I bet TrueCar in the early days did not have the great offices overlooking the ocean.
Yeah, we were at 6 and Broadway, not 1st and Broadway. The offices were, famously shitty. You would walk in and it was just really, really bad. And we didn't have flat screens and that kind of stuff. But I think we always valued where we were located. I think that, the stage of the company, we're a hyper-growth company. We'll grow 50+% a year for the foreseeable future, probably for the next decade, and we're in a very big category. I think if we were to plateau, maybe we'd reevaluate that, and I probably wouldn't be CEO. So I think that the culture really is a reflection of the entrepreneur. I think that our culture is one of aggressive growth and smart growth, and the company's ambitious in that way. It's not a comfortable environment either. I mean, we're a meritocracy of ideas. We're constantly debating which way we go, but we've also survived a boycott and a near-death experience as a company, and I think a lot of people are very proud that we're positive cash flow, and we take that very seriously.
And I want to jump in as well and just say, we spent a lot of time talking about Silicon Beach. Julie's talked about Pasadena. There are wonderful startups all over Los Angeles. When I started my startup, Upfront was my lead investor. We also had Google Ventures as an investor, and Graycroft, which is another large firm here in Los Angeles. Graycroft just moved to downtown LA, actually right next to a gun club. Fascinating, but is a wonderful, wonderful firm. The startup that I started, it's called Seedling. We just moved to really beautiful, low-cost space in the Arts District in LA, which is just I grew up in Los Angeles. I left for 15 years. I grew up here. I feel like I'm in Brooklyn or the West Village with great weather, 50-foot ceilings. Seedling's engineers are flying drones around, beautiful light. I mean, people walk in and this is like a statement, and the cost is incredibly low. We're next to a Warby Parker pop-up, and it's wonderful. So I think, it's, you're seeing Santa Monica and Venice, et cetera, is obviously a big hub, but you're seeing it all over the city, West Hollywood, downtown, Pasadena, and you're seeing VCs and funding sources all over the city as well. I think it's just important to note that we're not just Silicon Beach.
Right.
Yeah.
Steve, let's continue to talk about the negatives of LA if we can find them. We don't want to be all one-sided panel. Regulation, taxes, and other issues with LA. A lot of the discussion at Milken Conference is about a lot of people complaining about banks, or the regulation on banks, and the inability to lend and the constrictions there. And then in LA, generally, this is the highest tax place. I mean, like, why does all these super smart tech entrepreneurs that make billions put themselves in a place with the highest taxes and not move to Austin or Florida or something like that?
Well, there has been, some movement away, but at the end of the day, LA has a few kind of irreplaceable factors. One,
Pacific Ocean.
the Pacific Ocean's nice, but you also have universities and schools and training grounds that extends into early parts of folks' careers around media and defense and some of the larger strategics. So we get a lot of talent coming out here to start, which is important for us. And then number two, it's I believe a less developed kind of path in LA. There's a lot of people doing a lot of things. Even our most developed industry, the entertainment industry, tends to be pretty undeveloped itself. If you could tell someone what the steps are to create their movie, we'd probably have less waitresses and waiters in town. But it tends to be a process that's less well-defined. I think that even when you think about tech and you go up to the Silicon Valley, there's a pretty well-defined process for a successful entrepreneur to take. What's the A round look like? What's the B round? Who are the right people to get involved? Whether it's Silicon Valley Bank or Bridge Bank or Square One, how's that banking relationship look? You have an economy that, while it was formed on entrepreneurialism and creativity, it's now started to fund itself and process itself in a pretty standard way if you have the credentials for it. When you come down to LA, I think it still has a lot of those characteristics of creativity and kind of the Wild West, where if you don't like the institutional funding round, a lot of entrepreneurs just don't want to have those strong private equity or venture capital sponsors. They want to run their business their way. They have a different view of how to incentivize their employees, or what the duration is for an exit, things like that. You can go to the family office, you can go to the private investor, you can go to the angel. I think the diversity of capital, I just come back to what Scott said about things grow where the water is. Out here, if you actually have a novel approach to your business that flows from how you want to structure capital-wise, what your duration is, what your potential exit is, there are pockets of capital, pockets of funding, and welcoming entrepreneurialism that I'm not sure you find in a lot of the other climates.
I want to just respond to that real quickly. One of the challenges that we still have in LA, and Scott is going to be a huge ally here, is to gain the respect of other markets, in particular Silicon Valley. I believe we're going to need some real big exits, right? We've had some that have been the makers with Disney, which is great, when Oculus, with Facebook, and Cornerstone. But I really think that until we start either having big strategic acquisitions or IPOs, we're just not going to have that level of respect with the traditional institutional players out there. It's something that we're working towards, and I think we're getting there. But when we have those exits, or just the super hyper valuation rounds like Snapchat had a few months back, we still have a ways to go, and we're getting there. And TrueCar will be a great stamp for us. But that's something that I think we really need to focus on if we're going to really take that next stage to growth as an ecosystem.
Well, what tends to be interesting about Los Angeles across the various sectors is historically we have been focused on exits.
Yeah.
We're kind of a feeder system to large Fortune 100 companies around the country and around the world, where when businesses grow up in LA, they tend to sell themselves to businesses in Minneapolis and New York and San Francisco. In Silicon Valley, it may not be the same mentality, and even in big cities across the way, they may talk about some of the liquidity events, the Facebook and getting big valuations, but they tend not to be as willing to look for exits. LA's kind of been born on exits and serial entrepreneurialism, and not kind of keeping the company until it grows into just a certain status within the realm. And that's been interesting because it's been the history within banks in Southern California that have all sold. The large banks have all sold themselves. We just had the recent announcement with City National where they sold themselves to the Canadians. You've had that within consumer products. You've had that within defense, where Hughes Aircraft moved out of Southern California and sold itself. And I think that you're seeing just a similar culture within the tech industry, where it tends to be exits. The exits may be a little bit earlier than people are comfortable with in different parts of the country, but it's a similar culture.
And can you, just to change topic a little bit, Steve, we talked on the phone a little bit about your growing business segment is Latino homeowners and Latino businesses.
Well, we've talked a lot about entrepreneurs in the tech sector today, but that's just a very small sliver of the entrepreneurial activity in Southern California. Mm-hmm. When you look at who the fastest growing and most often group of new business is, it's the Latino segment, and in particular, it's the female Latino segment. When you look at the fastest growing group of homeowners, it's also the Latino market. When you think about, if you just did a look at SIC codes and new business generation throughout LA, the tech sectors represents a microscopic part of it, and the immigrant community is the dominant player in that. And so often entrepreneurial activity and new business creation is opportunistic, but sometimes it's cultural. Sometimes it's just you need to do that because you can't find another job. But when you look at LA in totality, and you look at where new businesses and where new jobs come from, it tends not to be in the tech sector. It tends to be attributed to the diversity of all of LA's businesses. It tends to be those neighborhoods that you're flying over on the way to LAX that are the farthest thing from technology and the beach. But LA is the fastest growing city as far as new businesses, home ownership, and creation of startups and jobs associated with startups. So when you look at the changing demographics, I think that culturally, entrepreneurialism is really important. You could see similar trends in different sectors, whether it's technology or media or just starting a restaurant or an agricultural company. And LA is really thriving in all those areas.
Cool. Two last things I want to do. If you, for all the panelists, if you could advise yourself at age 21, 22 to start a business today without, any, your own history or just clean slate, what would that business be? And also, I want to have a debate between Julie and Scott. You're working on technology to fuel driverless cars, and you're interested in selling cars. So, and LA is a car culture. So what's going to happen? What do we?
You want me to
Is
go
it going to be
first?
illegal to drive a car in the next 5 to 10 years' time?
Well, I get asked a lot about the sharing economy and sort of the impact of millennials not wanting to own vehicles, and yet we're sitting literally at the almost peak in terms of absolute cars sold in terms of vehicles in the U.S. And so I do believe that the issues that keep people from buying a car more than once every 6 years have to do with how gnarly it is to buy a car and how rigid auto finance is. And those two things are really, I think, very addressable issues. And I think if you can increase the velocity of how often we buy cars by making them easier to buy and more affordable, that you're actually going to see vehicle ownership rise. I think that if you look at sort of where we were in sort of the 1999 to 2001 timeframe, where we actually had a little bit higher total cars sold, 17.4 million cars in 2001, we had about a 30% smaller population. So there's actually quite a bit of headroom in the overall rateable number of cars that we could handle in the U.S. I do think that there is a very deep love affair with the car. I think that there is a very real sort of benefit of having a sharing economy. We're not going to drive drunk as much, and I think that the issue of whether or not young people are going to buy cars is really going to be about affordability and ease of being able to do that. And we're really focused on those two things. So I think we're heading towards sort of very good times for the car business. I think that the fundamentals are strong with gas low and likely to stay low. I think you're going to also see the product shift in terms of what consumers want to buy to be SUVs, luxury cars, and trucks more than ever before. And I don't know if that's a good or bad statement about the world, but I think that it's good news for the car business for sure. And there's really no evidence that autonomy in cars and the technology is going to reduce vehicle ownership. It's certainly going to reduce accidents. It's going to reduce, sort of the tragic side effects of vehicle ownership.
So I think for you,
Can you explain your technology first?
So I have just formed a company called Strobe, which provides sensors for self-driving cars. And one of the things holding back self-driving cars today is that from a technical standpoint, you have to have very strong situational awareness to be able to detect things around you. And at the moment, if you've seen the picture of the Google self-driving car, they talk about the fried chicken box that sits on the top of it. This is a system that costs about $80,000 in a prototype stage, which is good for Scott, because you're never going to buy a car with an $80,000 sensor on it. So I think for the event horizon for Scott's business is, he's going to double at least 2 or 3 times between now and the time those cars are available widely. So, but I do think that there is a period of time, and it's probably 10 to 15 years out, where you could start to eat into the growth of the car industry. But I agree also that people love cars, and everybody's going to want to have their own car. So I think that there is just a brand new market coming up that's going to disrupt everything. At the moment,
Do you just a question though? Do you think that young people today don't want to own vehicles? That there is a trend, a genuine trend towards not owning a vehicle?
I do think that there is a trend toward the sharing economy, and there's a company, a startup that formed here in LA called PodShare, where it's a kind of you go to a hotel and you kind of live in a shared space, more like a dormitory, and I'm like, who would ever do that? Young people, they don't care as much about ownership, and maybe it's because of the state of the economy.
I think that's weird.
I think it's weird too, but that shows our age, Scott. So
the stuff I have in my car, I don't want anybody else getting to.
Yeah,
I don't want to lock my car.
I think for the people sitting in this room, we're used to owning cars. We want cars. For kids coming out of college who share bicycles in the city, I think it's going to become a very natural thing. But there are many people around the world who don't own cars. At the moment, it's not an issue, because right now you have to control the environment very well for a self-driving car to even be possible. Right now, it's like super cruise control. For a real self-driving car to work, you have to be safe 99.9% of the time. If you're not, now they're in the mid-90s, that means every car is going to have, for every 100 cars, you're going to have 5 issues possibly fatalities. That's just too dangerous. So at the moment, Scott, you are in good shape.
Well, I think
I'm
cars will
behind your
get safer,
stock.
though. I think they'll get safer, and they'll
Yeah, I
help us to
agree.
be better drivers.
So Walter, you're 22 years old, graduating from Middlebury.
Yeah.
What business do you start?
Yeah.
And where?
I was thinking about that when you asked the question. So first, I would have spent a lot of time in the computer lab learning how to code. That was the first thing, because I wasn't doing that. I think we just started doing email my junior year. So I think learning languages, and in particular the language that have been most prevalent on the mobile device, to really be mobile first in the way that I think, which is which is kind of the way a lot of people who are building today. But also just the dynamics of that user experience. It's different than a television. It's different than a laptop computer. It's a smaller screen, but there's a hell of a lot more functionality than you'll see, and it's mobile inherently. So 22-year-old Walter would have told him to be coding in Swift or one of the other languages prevalent in the mobile environment. And
In a dark room in Bakersfield. Right?
yeah. And I would also be more accepting of risk, which I think is something that we're getting better at here in Los Angeles. But going to a big company versus starting off on your own with a smart engineer or product development UI team, you can learn a lot more. You can just get out there, you can test, you can get feedback. Some lady from the box was here. What they did in order to advance their MVP is amazing. They use user feedback to really build out their product unit. So the ability to use the marketplace to get information about what's working and what's not working, I would have embraced those types of things, and I think it would have been really beneficial for me.
Kara, you just spent 4 idyllic years in Princeton, New Jersey. What would you do after graduation?
I'm a look forward, not look back person, so it's a little hard. But I would say one, I'd get a real skill, which I think I got. But I think having like something you do really well, that when you go into a job, you can do really well, and then building around that, whether it's coding, designing, running financial models, selling, just get trained in something where you're awesome at it, and you can then find new roles and kind of move from there. And I think the second one I'd say, and I think it goes with the Milken theme of the day, is I'd surround myself with people who are a lot different than me, and whatever that is, gender, ethnicity, if you're a salesperson, an engineer, like just difference and ways to inspire yourself to want to be better and learn and find those passions in life that are going to bring you joy. I mean, we're all here for, 80 to 100 years, and at the end of the day, I often say, is anyone really going to care what company I invest in tomorrow unless I fundamentally change a water supply issue or a food issue or an education issue? So you might as well figure out how to be inspired, be happy, constantly learn, and I think you can do that best by surrounding yourself with people who make you better, inspire you, and think differently than you.
Cool. That's good. Steve, would you start an online lending platform?
I probably wouldn't. I would. What I've learned is that businesses have to change pretty rapidly, and that your business model always has to change, and it's hard to know exactly where a new business is going to go. So I'd focus on control, governance and control features. And if you know that you're going to have to make a lot of strategic decisions going forward, I think people underestimate how important it is to make sure you remain in control of the business and the dream that you're trying to build.
Mm-hmm. You see the future, right? You know what's going to happen in 10 years' time, right?
No.
No?
I think venture investors are all about risk management and risk reduction. So if I'm advising my younger self, it would be to say, find ways when you're creating a company to reduce the risk. And I think for an entrepreneur, one of those ways of reducing risk is take a look at something that's been tried and almost made it, and try it again. Yeah. Look at Google. It had Alta Vista. It had Yahoo. It had a number of search engines before it was great. There was Friendster, MySpace, and then came Facebook. I think even Scott might have done a few car-based startups before he did TrueCar. I do think it's possible if you stay in a lane, or you see a lane that you know it's right, but it just hasn't hit, that's a good way to reduce risk.
True space?
It's funny. I have 4 kids, and so I'm famous for saying, do as I say, not as I do. I'm a multiple-time college dropout.
How do you do that?
You keep going and then dropping out, and keep going and dropping out. Probably one of the big regrets of my life is that I didn't finish West Point. I think there's more to that thing than there is in terms of education. And I was, at the time, impatient. And I think that I probably would have told myself to focus on, learning a language while I was young, studying physics, computer programming, definitely, traveling a lot, trying to be a bit of a Renaissance man. I wish I had a skill. I wish I could play the piano or play the guitar. I just admire people who do that. I think they have such a great off-work life, and it's very hard to learn when you're older. And I've tried, and it's very frustrating. I would have tried to get a work-life balance much earlier in life. You only go around once, and I was a workaholic for 40 years, and I think I regret that. I wish I would have had more fun along the way. I'm having fun now, but I wish I would have had more fun along the way.
It takes dedication to be an entrepreneur, as you said, right? You got to do it where you like. And I bet you a lot of your West Point classmates regret that they're not you. So
maybe not. It's actually a lot worse than it looks.
The session is over. That's it. All right.